Bang. Welcome back, folks. I am Jon Najarian, and this is 3 at 3. 3 at 3, we bring you unusual option activity that we've discovered and that we think you should be aware of. So let's get started for the 19th of October. Unusual activity, of course, calls that are bought on the offer or puts that are bought on the offer. Everybody else just guesses at it. We actually know because we've got access within the data centers of the U.S. options exchanges. So with that said, let's dive in. I wanted to explain this one because, as you know, if you've been paying attention, we've crushed in Netflix. Netflix, we saw bearish puts last week on the 12th. And as we saw those bearish puts on Thursday last week, stock was 364. They were buying the 360 puts. As you recall, I bought the 365 puts because they were the at the money, which is what I like to buy, either at or just out of the money, not way out of the money. Anyway, we took profit on that, rolled down to the 355 puts, no, 360 puts, I'm sorry, from 365 to 360 to 355 to 350. Now, the reason we roll down, folks, that's why this is a good example. Yes, I know Netflix is up big today. So some of you, if you weren't paying attention, might say, well, gee, Doc, you guys got killed on this one. No, we took a lot of money off the table in this one. Here's how that works. I'm not trying to be aggressive against the haters. I'm just trying to explain. So if we owned the 365 puts, and the stock dropped to 358 or whatever it was, we took some nice profits off the table because that represented about a $6 or $7 drop. Then we rolled down to the 355 puts, which again took money off the table as Netflix fell to 348 or so. Then we put on the 350 puts. So that's the one that is the loser. After we took a bunch of money off the table on those first two, we did lose on the last one. And as I said yesterday, accurately, we don't exit, we meaning me and most of the people that follow our work, we don't exit until such time that the person that led us into the trade with their unusual activity exits the trade. I didn't see that yesterday or the day before. If I had, I would have closed the entire position. Did not. So I lost $1.50 on the puts. But did I make money? Yes, indeed, on the 365 puts, the 360 puts, the 355 puts, and so forth. So the fact that Netflix explodes to the upside, it makes it a great example of why I'm rolling down with puts. If it were calls, I would be rolling up, taking money off the table in each one of those situations. As you know, what I try to do is make 100% on my winners, cut my losses at 50% on the losers. So I thought this was a great example to put before you of how actively managing your positions works in your favor, keeps more money in your pocket. So again, I hope you guys had a great trade here. And I hope some of you even took a shot and bought upside calls. I did not. All right, let's get on to the next one. Affirm Holdings. This 2-day-old trade continues to work because we got into it with the stock at 1954. Guess what? The stock's down another 2.5% today to $18.20 a little bit ago. Bang. So again, if you bought those at the money puts like I buy and you move down with this, you're taking money and doubling. You're getting 100% return on your trade. That's what it's all about, being disciplined. And now perhaps many of you taking off some of this position and rolling down. That would, again, be prudent because they haven't closed these puts yet. Third and final of the ones that have worked so far, just in my little perusal here, IWM. Well, the market's weak. Why is it weak? Whole bunch of reasons. Don't need to get into that right now, but let's talk about the stock or the IWM ETF for the Russell falling from 172 yesterday to 168 today. 36,000 is 3.6 million share equivalent. pretty much killing it on this trade today. Bang. Should you roll down? These are December puts. Of course you should roll down. Take money off the table, roll down to the 170s or so. That's what a prudent trader would do. But again, I can't trade for you. I can tell you what I do. Bang. This one, SoFi, brand new meat, fresh meat, as you see, 10.19 at 1:25 in the afternoon. SoFi, they're buying that online financial player with the stock at 786. They're not betting on the upside. They're betting on the downside. They're buying the November 7 puts. Now, again, those are too far out of the money for me. I'm going to buy at the money, and my intention is to sell as the stock drops. So these are 3rd of November expiring puts, folks. Be aware of that. This is fast time decay. Be aware of that. How can you address that? You can sell a lower put against the put that you buy. That would be a prudent thing to do, I would think. Second trade today, American Eagle Outfitters. Well, they're betting on the upside here. Stock's basically $18. They're betting on the 19s all the way out in January. So time decay, not really a factor. Not in an option that's all the way out in January. So what I'm looking at is buying at the money calls, selling upside calls, but I don't need to be aggressive about it because time decay is very slow in this January option. So that's the second trade. Third and final trade is American Airlines. AAL stocks $11.82. They bought 5,000 of the January 11 calls. 5,000 is 500,000 share equivalent. It's enough to catch my interest. Okay, January 11 calls mostly bought for $1.35 with the stock at $11.82. Now we know they had earnings and they, like United, warned about the increased costs of their union contracts that they've just redone, as well as the cost of fuel, which is a major expense. So people are betting, some people, that maybe it has a rebound by January. Again, slow time decay. Somebody's basically getting into this for just over 50 cents more than the stock is trading, because $11 at the strike price plus $1.35 would be $12.35. That would be the price at your break even at expiration, and it's trading $11.82. So like I say, approximately 50 cents above. That premium extrinsic is about 50 cents more than just buying the stock. So instead of spending, if let's say you wanted to buy 1,000 shares, instead of buying 1,000 shares for $11,000, almost $12,000, you could be into this one for $1,100, 1/10 of the cost of owning the stock. That's why this is so powerful. Bang. All right. Make sure you check out Market Rebellion. We've got a lot of great subscription products, got a lot of great educational products. Remember, Pete and I will be down in Orlando at the Money Show. Orlando Omni Champions Gate is the hotel. We will be down there the 29th through the 30th. Make sure if you're in the area, you come by and say hi. Thank you. See you soon.